Good evening. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Thursday, and we are back on now the 12th of September, 2024. Well, you don't have a lot of economic data tomorrow. You got secondary data, as I call it. You're going to get the import-export price index at 7:30. Import price, and that the only estimate I saw was expected to be down 0.2, which makes sense. You know, China, sort of a deflation environment, energy prices been falling down. So that should be, I think, reflected there. University of Michigan preliminary consumer sentiment. The key word's prelim, so this is your first number. People will pay a bit more attention to that. After the close today, we saw Adobe come out with its earnings, and the earnings looked fine. The forward guidance didn't, and the market fell as much as 10%. I don't know where it's at right now. The last time I saw it was down about 7.5%. So market got hit rather hard. Now, if we take a look at what's going on, the stock market came roaring back. In the futures market, I was telling traders, and I mentioned it here and in my financial futures video as well, that I had told traders in my morning subscriber video, now that's the video people are paid subscribers with, that I thought the pros were going to cover all shorts yesterday because you would hit Bollinger Bands and key moving averages. The ramp back up yesterday, and with today, it's impressive, no question. But are you making new highs? You're not at this point in time. It's a nice bounce. Now the question is, does September end up ugly? Now let's define ugly. We're not talking you get 5% drops in the month of September. We're talking a small drop is often the case. So what we've done is we dropped pretty hard. We've made back a chunk of it. Now we're playing games there. For NVIDIA, you know, this is a market that was, in the 140s, went down to the 100 level, and it's made back a chunk. You're all of $20 away or so from a new all-time high. So not bad action, you have to admit that. You've heard me say in my futures and metals video that I am bullish gold. I think it was going to go, and the reasons, I'll give it to you. The reasons are I see sticky inflation. You take a look at today's PPI number. It was sticky. All right, no question about it. He had one of the numbers up 0.1%. CPI yesterday, same thing. However, it's the labor scenario that the Fed has got to turn its attention to. And if they're data dependent, not forward thinking, they're going 25 basis points because that's the blend. They'll say, well, does the economy really warrant it? The labor does. Is the economy falling apart? No. Can they say that labor's fallen out of bed the way it has in Canada, for example? They cannot make that statement. So I think the middle ground is that. Could they go 50 points? You don't close the door on it. It's possible. But I would think that they're going to go 25. And then if they don't like what they see between now, the meeting next week, and they'll get another set of jobs reports, they can always go 50 at the meeting after that. And I know people will say they're politicized. Nonsense. All right. So that's what I'm looking at there. So I like what the gold has because I think that the run-up to the discount, if you go and you study what PIMCO's report came out with, you typically, the 60 days before the cut, the first cut, you try to run up a bit, and then for about the first quarter after that, the market comes down before the dollar rebounds. The theory is that they've gone back quite a while on this, that the market's bullish as can be. We're going to get a rate cut, then the reason for the cut sets in, the market goes down. Then as the market keeps getting that cut after the first quarter, they get a couple, they go, hey, this market's really going to have the markets back, things are stabilizing, and the dollar gets a bid again. I'm giving you a whole scenario at one time, but that's pretty much what I think. You know, I like Amazon. I keep saying it, and I haven't been able to get traders in. I am talking to traders about buying the miners now. I haven't said that in a long time. So why don't we just go and take a look at BND? And before I do, I'm going to repeat. Please go on tonight when you look at this. Tell me what you'd like me to cover. Tomorrow's when I'm doing the chart. If I pick yours, and I'll pick one, 5 people came in with the same, I'm sorry, I'm not giving away 5 gifts. I will give away one. So I go in the sequence, they're there. So if yours is the one that I pick for it, away we go. I'm also looking at doing webinars again, and I'm not going to mix my SPDR ETFs with the futures market. This year I'm going to hold separate webinars, one for the people in this, one for the futures markets traders. I think it'll be a better seminar. I get so many questions on the SPDR ETF, I think it leaves out the futures people. All right. So as we're coming up here, as you can see, market's giving you a little stall. I'd expect that. It can pull back a little bit here, but the trend is ingrained. It's higher lows, higher highs. The thing that bothers me is where is the market in being either overbought or where Bollinger Bands are. You're well over the 18-day average of closes, so the bias is up, and now the trend is up. The Bollinger Band has been, if you will, the resistance point in the market. You've hit it, you've run it with the Gorilla Glue. Now, often on the Gorilla Glue, if you step away from it like you did here and don't hit it again, and you start taking out today's lows the day after, often it's a sign you want to come down a little bit, and what you want to do is keep your eye on the Bollinger Band. Now, the Bollinger Band is trying to get embedded. Watch this. Embedded today, both numbers over 80. Yesterday, both numbers over 80. The day before, not the day before. So tomorrow is the day that I think the pros will try to buy on the break as long as that red line doesn't get underneath 79. By day's end, if it is, I think they'll be out of that trade if they buy it before that gets under there on a closing basis. When I look at Rivian, as I told you as we came back up, I thought we were going to fight a battle between the 200 and the 18-day average. It's not going to stay there for too long, so the question is which way. If it takes off to the upside, maybe it gets to 1456, but that sort of tells me it'll be a very difficult road to try to get back down to these numbers to get long from. So that's something that I'm looking at. I think you're in sideways action and going to drift here in CrowdStrike, just back and forth, void of a trend. When I look at uranium, we got to bounce. You know the reason is because Russia is cutting off supplies of uranium, titanium, I said nickel. There's one other metal that they're cutting off from the U.S., and it's going to get worse with Russia. Russia today said that if the West allows the shipment of arms, NATO primarily, against, and missiles are used by Ukraine to strike deep within Russia, that they'll consider themselves now at war with that. Well, that's fine. They just took all their shipments from Iran. The world is not going to let Russia set the terms. The problem is, and please don't forget this, they're a major nuclear force. So it'd be one thing if you were dealing with a bit of sanity. I'm not convinced there's sanity there. And remember, he hasn't said anything about when Ukraine went in and grabbed a swath of land, and he was at first, a year ago, talking about he can use limited nuclear weapons. In other words, you know, small nuclear bombs, if you will, to take areas out, and he could. When these missiles come at him longer range, because the U.S. is supposedly on the verge of saying that they're not going to object to that. If that's the case and NATO allows that to happen, I don't know where it goes, but it's not taming down. It's getting worse. And as you know, Russia's been bombarding the heck out of Ukraine, especially infrastructure, as it tries to destroy what it can before winter sets in, just the way in World War II, and let Mother Nature aid them in the battle. Today, I also understand a grain ship out of Ukraine in neutral waters. A missile came in and took that out. When we look at Dell, well, I think you're like CrowdStrike. I think you're back and forth in the Bollinger Bands right now, not really ready to go anywhere. In Linn, was that the correction? Remember, we've been talking about this. Is the market getting itself ready to drift a bit here in front of the FOMC meeting next week? And when that cut comes, does it use this sideways action to possibly get a bid in it? That's what we're going to find out. Mortgage rates fell today to 6.20 from Fannie Mac. So that's very important. You're getting close to that 6 number, and that'll pick up some demand. And you see how that's worked in the homeless. You're out of your downtrend. You no longer have the lower highs, lower lows. So I'm pretty happy with that. And again, you went down to the Bollinger Band yesterday in the financials. They're getting a bid right here. The resistance is going to be 44.65, but I think the pros will come out of the market if you hit 45.21. It takes you out of the bearish pattern. In XLI, you came out of the bearish pattern today. Yesterday was the short cover day. So many markets yesterday in the futures and these went down to key numbers and bounced away from them. And now you took out that high. So you got a lower low, higher high. I don't see a trend right there. A lot of this makes sense. Now, I was surprised at the strength today of the markets when the hurricane hit, because a lot of damage hasn't been done. We may get a lot of rain damage, but the IEA, the other reports coming out are still bearish on the energy. Libya's ramping up oil again, so you got to be careful here. You know, this is a funny area where you're at. Market moved to the right-hand side of the Bollinger Band, still in the bear camp as I see it. In gold, well, I don't tell you to buy over the Bollinger Band, but I also tell you, when you narrow in like this and the market goes like that, your horns should go up, because if it now doesn't break back into the band, you're probably going to push this band to a new height. These are new highs for the gold market. Yes, new highs for the gold market. So get ready on TV. You're going to see the gold companies coming out. Have you looked at gold as one of your alternative investments? Blah, blah, blah. All right. In the silver market, higher lows, higher highs. That pattern where silver was losing its shirt to gold is probably over. You want to look at my futures tonight to get and see my confirmation or where we're at on that. You can see how the market's turned itself up. Now you got over what could have been the resistance of the 100-day and the 18. That's now the support. So don't be surprised if I'm telling traders in the morning that on pullbacks, I want them to buy these markets in my subscriber video. I'm not going to tell you what I'm doing, but I'm saying don't be surprised. In the copper, as I've said, the canary in the mine is copper. Now, like silver, it's got to prove itself. It's got to go up and prove it can get over this 100 and this 18-day average. The downtrend leg is over now. So now and I said that yesterday when yesterday's prices are taking this out, and you can see you're getting the short covering in there. Now the question is what? So why did the metals come alive? Do you think it could have something to do with now the U.S. is joining the party? I don't know if you read today the reports that were going on. I think I read it in, it was either Reuters or Bloomberg, where now some of the large banks in Canada think that the Bank of Canada is going to get aggressive and go for a 50 basis point cut, maybe two of them before this year's out, and be fairly aggressive next year, taking rates down to between 2.25 and 2.75. The U.S. is going to go down to wherever our nominal rate is, probably something near 3% is probably a number. So is the market starting to look at this and say that will help industrial metals? You don't know, but you got to think this through. In TLT, we have discounted this first rate cut. Understand that. Can you keep discounting it? I guess you could, but I think it's fully priced in. But this is what I was saying. You get sideways action, you latch onto it, it's fairly bullish. Now, it depends how gold wants to react with it, but now you're backing away. If the red line closes under 79, is it problematic? Well, first off, did you ever embed? You got both numbers over 80 today, but if I go back on this, and will it go back on me? I might have to get off that and come back to it, but it should. There you go. So the question is, the day before, September 11th they were, tomorrow's the key day. So you're not embedded, unlike some of the other markets. When we come over to UUP, look at how the markets come up. And what did I say? I thought you might fail up here. I've said that. And I've said on the futures markets, I've got my subscribers short the dollar. We'll see if the market's coming down. The chart picture on the dollar on futures is different than here, obviously, but this watches it, so you got to pay attention. FXE, I don't think it wants to go down to the Bollinger Band. You'll know more, probably in line to challenge the 18-day average, but we'll see. If it gets another big break and takes out that low, then the Bollinger Band's in play. So you put this all together, you try to come up with a game plan, and that's exactly what I want you to do. Come up with game plans for yourself. See what the markets may or may not do for you. That is the whole key. Now, I'm going to be putting out some special reports starting as early tomorrow. Probably going to do one on gold, and I'll do GLD and GDX while I'm at it. I'll let you know in the afternoon if I get this done. I've set up all the charts, so I expect to record in the morning. You take care.